Hello, my name is Steve Bigelow with the Candlestick Forum. Are we in a Santa Claus rally? This is why we always profess, let the market tell you what the market is doing. Today, we saw bullish trading early in the day, but then it reversed. And not only did it reverse, look where it reversed. Right at the same level it topped out before. Today, we saw a bearish engulfing signal in the overbought area. Kind of after some indecisive trading up here in the overbought area. Now, that alone does not necessarily mean there's a reversal in the markets. But looking at the other indexes is not a difficult process. It takes at least 15 seconds to look at all three major indexes. At the same time, we could see what was happening in the NASDAQ today. It was trading positive. When the Dow and the S&P 500 didn't look real strong. That gave us the impression that there was just money shifting or money going from sector to sector. But then we saw what happened late in the day on the NASDAQ. The positive trading went negative, failing kind of at this level. Not so much that it failed at this level, but it failed in conjunction with the Dow and the S&P 500. The S&P 500 hitting a potential resistance level, doji, bearish left-right combo right here at this kind of toppy area in the overbought area. Does this mean the Santa Claus rally is over? Let's just put it this way. The probabilities from what the market indexes are showing us are that things are selling off. Again, we go with the probabilities of what the markets are actually telling us, not what we think should be happening. And we also saw some of the major traders. Apple started out early, trading positive, making this a J-hook pattern prospect of breaking out through this level. But as you can see, closing lower at the end of the day made this pretty apparent that they weren't going up through this level. Things were starting to sell off. So trades that were already in place, when we started buying NVIDIA last week, because of the bullish doji sandwich breakout, today it was trading positive, doing what we would expect, staying above the T line, continuing the uptrend. But when it closed back below the T line, the probabilities now go dramatically in the other direction, that it's not going up, that it's kind of in a sideways mode, move your money someplace else. This is not rocket science. This is just evaluating what the candlestick signals are telling us as far as the strength or weakness of investor sentiment. The benefit of patterns, as we saw in our recommendation on HIB, is that a pattern is an investment sentiment buildup. It's not a one-time reversal. You can see the rounding bottom. You can see how the left-right combo of yesterday, I'm trying to think what day it is, told us that they were coming up through the T line. And notice what happened today. Even when the market was selling off, a fry pan bottom will continue to work because of the buildup of investor sentiment. This is also illustrated in when we recommended our RDWR. Look at the trend kicker signal breakout of a fry pan bottom through a resistance level that everybody else was watching. So we have a trend kicker signal breaking out of fry pan bottom through the 50. Now the trading analysis remains very simple. You can stay long and a fry pan bottom breakout as long as you don't see a sell signal to close below the T line. Even more important or more enhancing is the fact that they haven't even been able to close this below the 3T line, which tells us obviously they're staying way up above the T line. So the information built into candlestick signals and patterns dramatically improve your analysis, and it keeps your emotions from getting whipsawed, that you know that you can stay long on a position as long as it doesn't break the trading rules, like the T-line rule, where you stay long as it stays above the T-line. So we also can observe the obvious. We started shorting AR today, one of the refineries. Why? Because you could see there's kind of a bearish doji sandwich, failure at the 50 in the overbought area. Once again, the probabilities were pretty strong that if they were selling this off, failing at the 50 and closing below the T-line, where's your next target? Probably back down in this range, or wave 1, wave 2, wave 3 being the same magnitude as wave 1. But the observe the obvious title means you could see exactly where everybody was deciding to sell right here at the 50-day moving average. So with the market selling off, could the Santa rally continue? It could, but the probabilities are telling us investor sentiment is changing up here, that we shouldn't rely on the Santa rally versus what the actual charts are telling us. We'll be going through a session tonight, so you can come join us. We're going to just kind of evaluate what sectors might be the best ones for the first quarter of 2022. Join us. The link is in the text area. That'll be it. We'll see you in the chat rooms.